I have, as the introduction very kindly pointed out, 38 years of working experience, and I guess that's the grey hair and receding hairline demonstrate that the years have gone by very quickly. I've spent the last 25 years in Australia working with primarily mining oil and gas companies, but also I've worked with the Defence Department here in South Australia on the establishment of what's known as the P3 Accord, which is the P3 Orion support arrangements, which are still in place, I understand. I have a little consulting operation called Commercial Outcomes, and the slide there sort of illustrates what Commercial Outcomes is about. I describe myself as a South Australian business because I live in South Australia, but I've been a member of that Monday morning club and Friday afternoon club, which gathers at the airport. I've been flying interstate for a number of years and indeed overseas, working from South Australia in support of a number of clients. And if we just go to oh yeah, I've got this thing here, haven't I? Let's see if this does it. Yeah, there we go. There's a list of some of my more recent clients. I learnt my trade in Australia working for BHP. BHP Steel, would you believe? That again dates me probably. There was a BHP Steel company. I'm sure a number of people in the room remember it. But I was part of the BHP organisation when it evolved to become a truly international global mining operation. And I spent a number of years in Perth working with BHP Iron Ore and also with BHP World Minerals with exposure to the copper industry in South America and North America, but a lot of time in the iron ore sector. The work I did for BHP gave me insight into global supply chain, and that's where I've really focused my work over the years. I also worked for 5 years for Iluka Resources in the titanium sector, which is a slightly different type of mining exposure, but a very important one here in South Australia with their presence around the Ceduna area. And I was part of the team that merged Iluka and established Iluka as the world's largest titanium company based out of Perth, but with global interests. I've most recently worked for Oz Minerals through an arrangement with a consulting outfit called Arc Blue, who I subcontract to. And we've only just finished a major review of costs associated with the Oz Minerals operations here in South Australia. That is symptomatic of what's going on in the sector right now, and that the previous speaker touched upon it, is the real focus on costs and the opportunities that represents for people to get on board with suppliers who are challenging the constitution of their supply chain. And one of the key things to understand in the mining sector is there's really two phases. There's the good times. The good times are where production rules. Tons out of the door is what matters. And people will basically almost pay anything to get tons out of the door. And we've seen that over the last few years through the mining boom, where productivity has declined, costs have gone up, the industry has paid any price to serve its client because the revenue stream was so massive and really enormous. The second phase of activity in the resource sector is when times are not good, and the focus shifts to cost, and that's obviously where we are now. And people will challenge mining companies. Are right now engaged in intense projects challenging the constitution of their supply chain. And as the previous speaker pointed out, that is a massive opportunity for new entrants. I think the fashionable phrase is disruptors. You can be a disruptor. You can enter the sector, attract the right people in the right way, and there's an opportunity potentially there because companies can no longer afford to continue to support the supply chain solutions that they had during the really, really good times. So let's go to the other pack. Enough about me. Did you find the second pack? It's called Presentation 9th of February, funnily enough. Here we go, yeah. So one of the things I've specialised in over the years is helping companies in the mining, oil and gas sector, but not only the mining, oil and gas sector, but primarily there, with transitioning and developing their supply chains, helping them to get to new solutions that align with the climate of the time. In other words, the good times and the not so good times. There's a pack here that I speak to with clients, which has got 145 slides in it. No, I'm not going to present 145 slides this morning, you'll be relieved to know. But I do have the ability to work with clients to take them through how their business can adapt to the opportunities of the time. So let's, if I can get this to. The content of my training that, and enablement and facilitation with clients who want to develop their capability in the mining, oil and gas sector, or indeed enter it for the first time, essentially is dealt with by a series of learning objectives. And this probably dates me again. You know, learning by objectives is a fashionable thing back in the 1970s and 80s, because that's when I learned about how to do things. So I make no apology. It's probably a bit dated, but it works. And what I try to do is adapt this to work with clients to meet their particular needs. But in essence, this is the sort of ground that I think is important, that people new to the sector, or indeed who are in the sector but need to adapt to the new situation, they need to be aware of. And if we just quickly step through some of these points, and what I'll do in the remaining 15 minutes is just give you a little bit of a feel for what we could cover in this respect. So the understanding the structure, geographical structure of the industry, understanding the key facts and data governing the current environment. A key issue is understanding China, and the previous speaker spoke about the opportunities that China represent, and understanding how to do business with the Chinese is something that I can assist people undertake based on personal experience. A key issue is also to understand how mining companies work, how decisions are made in modern mining companies, how these decisions are contingent on the environment and the context of business at the time. In other words, the power structure inside a mining company switches to match the evolving business climate. It's different people you need to deal with, and the decision-making may not be quite where you think prima facie the organisational structure indicates it should reside. So, some time spent understanding the decision and political structure of a mining company is valuable. Government, the role of government, the supply chain systems and processes, and how outsourcing is actually done, and why outsourcing is actually done, and how those decisions change over time. The strategic supply toolkit, which most modern mining companies use, it's understanding how that is structured is something also to be covered. And then in terms of understanding where the opportunities might be, again, the previous speaker pointed out that Tier 1 is, the mining company itself or the oil and gas company itself. They may not be the right place for you to go and attack. It may be better to look into the supply chain and find a better point of entry than trying to, for example, attract BHP Billiton's attention. So that's something we can also cover. What I'd like to do now is just to remind people, obviously times are tough right now in the mining sector. It's no longer the fashionable sector. The LNG, which was the big fashionable projects on the East Coast in particular, but also off the Northwest Shelf. The papers were full of that 2 or 3 years ago. Now you hardly hear a mention of them. Nobody wants to talk about them. Santos is suffering. Everybody's suffering. The big investments, the big projects have lost their attraction. So it's easy to forget still how important the resource sector is to Australia from an export point of view. Massive opportunities. It's still a massive driver of the business. We've got a big downturn now following an extended multi-year upturn driven by essentially Chinese demand, but not only Chinese demand. It's easy to think right now that times are tough, and why would you want to get involved in this sector at a time like this? But the remarkable thing about mining sector and the oil and gas sector is they're so resilient. At the moment, all the indicators are that it's some years away before we'll see the big recoveries. It may come quicker than that, and in fact, in the past, sometimes the recoveries come incredibly quickly and quite unexpectedly. My guess would be is that the oil and gas sector will recover before the mineral sector, but who can be certain? So we shouldn't lose sight of the fact this is a big pie represented by the mining, oil and gas sector, and the Australian economy will, for a long, long time to come, be very, very significantly influenced by it. The biggest hitter here is obviously iron ore. Iron ore is still being produced out of Western Australia in particular in massive quantities. Rio Tinto and BHP are still producing furiously the enormous quantities. When I worked for BHP Iron Ore, it was shipping 45 million tonnes of iron ore per annum. It's now aiming for 300 million. It's just astronomical, the quantity of iron ore going out. And it's still going out. The price they're getting is much reduced, but the quantities are still up there. So, there's no wind back in the iron ore industry. They're just getting lower prices. There's massive quantities being shipped. Different story in coal. Coal, there's two types of coal. You need to understand the market divides up into thermal coal, which is power station coal, and metallurgical coal, which is used in iron and steel production. Thermal coal is very unfashionable, all sorts of reasons. Prices right down. Metallurgical coal, still down, still suffering because Chinese steel demand is down. But metallurgical coal was still seen as a good long-term prospect. But coal has wound back quite significantly. LNG, we've just talked about. Huge future to LNG. Australia is going to become one of the world's biggest producers and exporters of LNG. That's not going to go away. All those big projects that have just about reached their conclusion around Gladstone will not be disappearing. Times are tough for them. Santos is, as I'm a shareholder, like many people in the room, I'm sure, it's a pretty sad-looking situation, but it ain't going to go away. Those opportunities in the production phase are going to be there for years and years and years to come, and it'll look better and better as the price internationally recovers. And then you can see here some of the other players. And if we look at it slightly differently, you can see here that these commodities still right across the board are, notwithstanding the downturn, are still very significant export earners and are predicted to remain very significant export earners. But let's just dwell a little bit on the sad news, just to put it in context. Have we reached the bottom? Have commodity prices, oil and gas, and materials, have they actually bottomed yet? Hard to say, but probably not far off. We're beginning to see that bounce along the bottom. This looks bad, but we've been here before. I was talking to a lady at the back of the room earlier on about years ago when I first joined BHP Iron Ore in Perth, and I flew across from Sydney to join the company and arrived at Perth Airport and got a taxi, and the driver said, "Where did you want to go?" And I said, "Well, I'd like to go to BHP's office in Mount Newman House, please." He said, "Oh, I know where that is, that's no problem." I said, "Oh, how come you know it so well?" He said, "Well, until last week I was the Director of Exploration and Geology for BHP." And he was driving a taxi. Now, 2 years later, I met him in Mount Newman House, and he was the Director of Geology and Exploration for BHP. The resource sector always has been a bit like that, but we've just had an exceptional period driven, obviously, by China. But the resource sector will come back, and now's the time to position to chase the opportunities. Chase the opportunities by being part of the solution during the cost down phase, and to chase the opportunities by being positioned to take advantage of the upturn, which will come. Not quite sure when, but it will come. So I'd just like to mention a little bit about, I'm just conscious of time, we're doing okay, just the significance of China and the relationship with China, which is an important one to understand in the resources sector. Obviously, for iron ore, it's absolutely a massively significant play. China prefers Australian iron ore because it's good quality, it's very shippable. From South America, it's much further to ship, although China's taken some initiatives in recent times regarding ownership of ore carriers and things like that to send a message to Australia that don't assume it's going to always be the dominant supplier to China. But Australia is very well placed long term to supply China and other major Asian players. But you can see how significant the relationship with China is, and as business people, we really need to understand how to work with the Chinese. There's some views around that we have to be super careful with the Chinese. There are other views around that as long as you play the game sensibly, there's big opportunities for everybody. And the Chinese will work very successfully, and in fact have become major players in the resource sector in Australia. But as mentioned by the previous speaker, they present also an opportunity for counter-trade. You can see emerging opportunities in the Chinese market that you can leverage off relationships established here in Australia in the resource sector to go back into China to sell products to the Chinese. And a few years ago, I did some work with Metso Minerals, one of the biggest producers of fixed plant in the resource sector. And we did a fair bit of that sort of work, of moving supply chains into China and selling into the Chinese market at the same time. It's not just iron ore. You can see from this slide that China's a very significant taker of all sorts of products. This is an interesting slide that's from The Australian recently. And it illustrates why quite a few companies in the South Australian iron ore sector that looked very promising a year or two ago aren't so promising in the iron ore sector now. you can see over on the left-hand side there that really there's only a couple of 3 companies that actually make money by selling iron ore. The cost base of so many companies is still far too high. But companies aren't sitting there and just accepting that, they're fighting it. And this is again where opportunities present for new entrants into the game to chase business, to help these companies reduce their cost base and to become profitable. But the iron ore price the other day was 44.70. That's still not going to make huge amounts of money for some of the smaller companies. And in South Australia, for example, we've seen Western Plains exit the iron ore game and become a gold miner because gold's paying money. So, these companies aren't necessarily disappearing. They're swapping their game. They're adjusting to the circumstance, and they remain opportunities for people to pursue. The other thing to keep in mind is it's not one size fits all what's going on. People are at different steps in the cycle of recovery. This slide is a little busy, and more than happy to share it with people later on if you want to study it a little bit more. But it's actually out of a Macquarie research paper, and it was published, I think, in the Australian not long ago. But what it's showing is that companies that are in the gold, lead, natural gas, zinc, chrome, silver, palladium sectors are ahead of the cycle in terms of their recovery. The market that they're operating in is coming into balance, supply-demand balance, and they're starting to become profitable again. So it's an interesting slide because it begins to point where the opportunity might be to go and chase some business rather than being a little uncomfortable about trying to get into the sector when everything looks so bad. But it's an interesting insight. This is just a quick overview. There are much better maps produced by the government than this one. This is a simplification. But for people who are new to the mining sector, this is just really understanding where the action is. And let's be honest, most of the action is Western Australia and Queensland. And this, again, speaks to a point previously made about your willingness to go chase business beyond the boundaries of South Australia. By all means, chase business in South Australia here. There's some good prospects, but the ultimate aim to make good money and to prosper, you've got to be willing to get on the aeroplane and go and try and sell your product in the first instance, probably in Western Australia or Queensland, if not perhaps New South Wales. But just relying on chasing business in South Australia in the short to medium term probably isn't going to make you terribly rich. So what have we got? We've got new projects appearing in North Queensland. There's an Indian investment, Adani Coal. That's slowly but surely making its way through the Queensland approvals process and the federal approvals process. It's meeting some resistance because it's unfashionable coal, but that potentially is a big project, multi-billion-dollar investment by Indian private investors, and there'll be quite exciting prospects longer term with Adani. You've got the closeout of Gladstone and all the construction phase activities, but moving into supporting phase of production. So you've got shutdown work, you've got maintenance support, you've got all that sort of activity to go on continuously for 20, 30 years. In Western Australia, you've got the offshore LNG activities, Wheatstone, Northwest Shelf. You've got the Ichthys project in Darwin. there's plenty going on. It's not, the downturn has stopped everything. There's huge amounts still going on around the country. A little bit more detail here about those major LNG projects. There's a whole pile of information I can share with you if you wished about who the major oil and gas players are. Equally in the mining sector, who are the key players that, if you like, the tier 1 level of engagement. What this slide does, apart from shock you with its different mix of colours and all the information on it, but what I've tried to do is capture on one page here the major activities going on in South Australia. And there's some things going on in South Australia, not as much as during the height of the boom when iron ore prices were up. There were 3 or 4 major iron ore plays, all advancing beautifully until the iron ore price collapsed. But those deposits are good quality deposits. They're not going to go away. Quite a few of those projects are magnetite iron ore, which is, what gets shipped out of the Pilbara is hematite. Different type of iron ore, a much purer form of iron ore, doesn't require so much on-site processing. But Chinese steel, iron and steel companies will pay a premium for magnetite iron ore because it clumps it has magnetic properties where it self-clumps in the Bessemer process and becomes particularly valuable. And most of the projects in South Australia were going to be magnetite iron ore. So, there's a number of things still going on in South Australia, but not as much as there was. And again, going back to that theme, a willingness to jump on the plane. That's pretty much time out for me, but you could probably tell I could stand here all day and bore you to death with all sorts of stuff about the mining sector, but there's just some stuff here just to mention. The ICN, give that a Guernsey. If you're familiar with the Industry Capability Network, that's a very important way of getting noticed. If you want to get into the sector, get into projects, the ICN is an excellent tool. And I can provide a lot of advice on, if you like, the lower tier engagement. In other words, who are the different suppliers that operate in all these major input areas to the resource sector, to the BHPs, to the Oz Minerals, to whoever is the tier 1 activity. There's a whole host, dozens and dozens and dozens of active suppliers who work in all of these different categories, and I can provide insight to those. So, for example, maintenance, repair and asset management, a whole list of different suppliers there. So I just wanted to also mention a lot of focus earlier on about IT and the opportunities in the sector for IT. There's always this view in mining in particular that it's digging dirt. Yes, it is digging dirt, but increasingly there's a lot of technology involved in it and a lot of technological input to that effort. So huge investments going on in autonomous mining systems. Well worth getting to know. Anyway, enough. Thank you very much for listening to me. I appreciate the opportunity to speak to you. And if anybody wants to follow up with any of the points or get a little bit more detail, I'm more than happy to talk. So thank you.